Morning, everybody. It is 8:10 a.m. It is October 20th, and this market, it's got some fear in it today, or got some fear in it. Okay, Powell didn't help the market yesterday with some of the things he had to say. Um, he's data dependent as usual, but it was definitely not dovish at all. How he was talking kind of spooked the markets. 10-year yield went up to 5% for a brief second. That's the highest since 2007, I believe. So the yields are putting pressure on these markets. Okay, that's what's going on. We got the wars ramping up. A couple of attacks on U.S. posts in Iraq, in Syria. Okay, that's been going on. So a lot of things to cover. Today I might make a little pivot because we all know what the market did. Just to check out overall where we're at in the market. Maybe look at some sectors and look at some structure in the zoomed out view today. All right. So welcome to my channel. My name's Steven Gonzalez. I use volume profile, market profile to find structure in this market. I also use supply and demand levels, gamma exposure, and the most trader price of the year, the month, and the week, and the previous day. All right. That helps me look at structure. That's what I like to look at. I like to see the market as an auction, right? And the most traded price is the fairest price that people are willing to trade shares or contracts at. Okay. If are new to my channel, subscribe, set an alert. All right. I do this every morning. It'd be nice for you to join me. All right. If you like what you see, please give me a thumbs up, a like. Appreciate it. All right. You can follow me on X at Gonzo719. All right. We can get right into this. Get right into the futures watch list. Okay. Let's do it. All right. So, war's going on, right? So we got Bitcoin at 30,000. Hasn't been there in a while. Now 30,000 is a huge level. Okay. Big level. I'd expect it to make a pit stop here. That's just how markets work. So that's up 4.12%. Okay. Now you're going to get some sympathy love with some stocks like that one, Coin, Mara, Riot, Block. Okay. Um, Ether's up 3.35%. Silver, now the war's going on. People are flocking to the metals, right? Silver's up 1.36%. The war's escalating, right? So now crude is up 1.21%. Gold is up 0.54%. Gold is heading towards $2,000 an ounce again. Okay? Bonds are flat. All right, been taking a beating, but they're flat right now. 10-year yield reports at 820. Okay, now yields rocketed up to 5. All right, that's going to keep putting pressure on tech stocks, especially tech stocks. Okay, and putting pressure on dividend stocks like utilities. Okay, some of those dividend stocks, if you can get a better return in bond yields, you might sell those and just go into bonds, right? So that's what's going on there. The dollar is slightly down. The Dow is down 0.26. Okay. Russell down 0.26. ES down 0.27. The Nasdaq's down 0.35. Okay. VIX is at over 20. It's at 21. It's actually down 1.54%, but it's at over a 20. Okay. This is going to be a very volatile day at a 20 VIX. Okay. You're gonna get some crazy moves. All right. All right. Let's look at the stocks I like to swing trade and day trade. Okay, here's a sympathy play. Coin, right, up 3%. Okay, 75 though is a very very key level in the coin. Okay, it's been the gamma flip point for the month, for the week, so that's a very big important level. It's in the middle of a mess right now, so I don't really like the chart, but it's queuing up for a big move though. All right, Meta's up 0.19. Then you got Boeing. Boeing, I really have that on watch. 185 is the level I'm looking at. All right. If it was a trending up market, I would have been long Boeing. But right now, there's uncertainty. Okay. AMD. Okay. I actually took profit in that play. I had a put ratio on there. Okay. I took profit in that yesterday on the move up. I just don't trust this market. I don't trust it. I don't want to be waiting on that put ratio to give me additional credit next week, so I took some profit from that. All right. Netflix, big move up. That's pretty much flat. All right, let's go to the laggards. Roblox. All right. Roblox, I really like it over $30. Okay, I really like the chart. There's a gap above it. I really like the way this is stock shaping up. It's just that the market isn't cooperating to push it. Okay. Tesla, obviously, very weak, down to 218, still down almost a percent today, down 0.9. China had a bad day in the markets, so that's down probably 1.62%. All right. Nvidia got a lot of price target cuts. That's not a surprise. Okay. Let's move on. Top sector stocks. Okay. Now financials have been getting smoked. You look at a chart of Morgan Stanley, it's been literally smoked. That's up 0.25. Exxon's getting love from crude in the war. Chevron, okay, but it's not up that much. Laggard, we got Disney, Salesforce, and we got Cat. Usually you don't see Cat at the bottom, but it's down 0.79. Okay, moving on to the sectors. Okay, energy, no surprise there. It's not even up really. It's flat. Okay, energy doesn't have to move lock and step with crude. Right, crude's wild. I used to trade crude all the time. I've kind of like stayed away from it a little bit more to concentrate on stocks. But it's wild, especially with war. All right, let's go to the laggards. We got three of them. All right, technology sector down 0.3, and utilities. Usually it's not. It's a defensive, but like I said, bond yields are more attractive than dividends. Okay, so those are down all respectively here. Okay. Weakest index in the morning is the Qs, the Nasdaq. All right. Short. No, there's not even much on the economic calendar today. Really, not a lot. But Fed Bostic is speaking right now. A couple things he says. Late to 2024 is possibly a time when the Fed would cut rates. Okay. So he's talking now. So the Powell talked yesterday, and then there was these attacks. All right. In right here. Of course, when I highlight that, it goes away. Yeah, so there was a reports of more clashes in the Middle East, right? Uh, Alarmed investors, with the Pentagon reporting an increase in drone attacks in Iraq and Syria. An American destroyer also shot down cruise missiles and drones launched towards Israel by Houthi militants based in Yemen. Okay, so that's what's going on. I mean, Bostic's talking, but the bottom line is these yields keep going up, right? So putting pressure on the markets. All right. Economic calendar today. It's very light. Let's even go to here. Very light. Fed Harker speaking now. Fed Mester at 12:15. 12:15, and there's not much today. There's just not much today as far as news. Okay, there's really just not much. Okay. They might be looking at another hike. So let's look at what we're looking at in the Fed target. We haven't looked at that in a while. So let's look at that together. That's the balance sheet. Here we go. All right, so we're still looking for not a change of a hike in the next Fed. So 98.5%. Oh, wait a minute. Wait a minute. I'm sorry. I'm sorry. That is not the case. Okay. There's a 98.5% chance the market's looking at a hike, another hike to the rates. All right, a quarter point rate hike in November 1st. So I read that wrong. It's 1.5 of no change. So this is really interesting. Fed futures pricing in A 98.5 chance of a hike at the next meeting. Pretty interesting. Okay. So that was your Fed target rate. So very interesting. We're going to go over to daily charts. All right. Not sure if we got any of the regular guys that watch or girls that watch with me today, but let's move on here to the daily charts. All right. Now let's look at this SPY. Okay. So a couple things. All right, I talked about this. I said, here's the fib from this candle, right? And I put it to here. This is before this high was made. Okay. So the 61.8 has now closed below the 61 point retracement. That, if it keeps going, we're going to probably look at testing this 200-day moving average again. Okay, 200-day moving average is at 422. It's rising. All right, this is last month's lows right here. We have had 2 days of selling in the SPY. Okay, now with this volatility, we could touch down here. So expected move today is $5.85. So currently we're at 425.16. So we are here 425.16, and we're gapping down right now. Okay. Now, this is a scenario where I don't know now because yields are so high, but usually when you get a couple days down, I usually get to get 3 selling days. I don't know. Well, actually, this is the 3rd day, and if you gap down, it's usually ripe for some type of bounce or reversal. It's kind of like what I like to see. Okay. So now we have we got these lower highs, right? Like now in the SPY, you have these lower highs here, right? So we got a trend here. You can see that it was honored when it went up here. All right, the long-term trend line here, we broke that again. Okay, so very crucial part in the market. Okay, now I'm gonna get rid of this for a sec, and look what happened. We closed below last week's lows. These orange lines are last week's lows, so we broke and closed last week's lows. All right, that is bearish, obviously. Okay, so that's a structure we're looking at in the SPY. Okay, now if we look at the Qs have been weaker. Okay, you can see the SPY just had 2 selling days with only 3 consecutive lower highs, right? This has had 1, 2, 3, 4, 5, 6 days of lower highs. Okay, so look at this trend line. It's been resistant, right? Look at this. Now look at this uptrend that we've had put in. Look where the market bounced. Right there, right? Now, if we're gonna look at zoomed in here, Fibonacci all the way up here, look what the Nasdaq did. It closed way below the 61.8. Now the 61.8 is really your last line of defense. So it closed way below it, closed below last week's lows, and we could be headed for 354. Okay, today's expected move in the Qs 5.8. All right, so $5.80. We have to see where are we at now. 358.30. 358.30. 358.30. So we're gapping down. We're down here right now. Okay, this market could take us down to here and get a bounce. Right? Don't know. A lot of selling in the Nasdaq. Okay, you can see it. It's just selling. SPY has been mixed because some markets, some sectors have been like making some moves. So we have to see. Okay, so very key trend line here held, but we're below that now, gapping down. Remember, 2 down days. This has had multiple down days. I mean, two selling candles in a row, two black or red candles in a row, and you're gapping down, usually you get a relief rally. Doesn't mean you reverse, but usually, okay, which that means is sellers want to take profits because you have a third day. If you're short from here and you have another day you gap down, you're going to be like, you know what, I'm going to take some profits, and then that's what happens. And then you get some longs taking advantage of that as well. Okay, so uh, moving average update. Oh, now the Nasdaq is below every moving average except the 200 day. 200 days way down here, so that's not a problem. Okay, that's not a problem. I didn't. Let me just check that on the SPY as far as moving averages. Yes, it's below every one and it's heading towards the 200. Okay, so we have to see. Okay, this is obviously 422's huge level. Okay, huge level. All right, now, okay, I'm gonna get into what the sectors look like. Okay, what the sectors look like. So again, I'm gonna show you guys this yesterday. Okay. All right, really quickly, I always look at the top four sectors that move the market. It's almost 60% of the market of the S&P. XLK is 27.5% of the market. Healthcare is 13.4% of the market. Financials is 12.8. Consumer discretionary is 10.7. Okay, so all of these combined, say that's 11, say that's 13, that's 24, say that's 14, that's what? 38, and then 38 and 28, what is that? 38 and 20, 56. Almost 60% of the market is in these four sectors. Okay, so that's why they have heavyweights. Obviously, communications is 8.9, but the top four are those I just mentioned. Okay, so that's why I like to look at them and see what they're doing. Okay, I like to look at them and see what they're doing. Okay, let's look at them. Now, XLK mirrors the QQQ sometimes, but now I want to mention something here. Remember, we closed below last week's lows. We're below every moving average in the triple Qs, but we're not. We came down to last week's lows and got support. Came down to 20 simple moving average. So the XLK is not as weak as the Nasdaq. Very interesting. Came down to this candle's low, right, which is previous week's lows. So right now we're holding, right? We're holding. We're a little below it today, this morning at 1.6. Well, the spread is too wide, but we're around here right now. So this really XLK either catches a bid today or it's going to take this out, and we're definitely going to move lower. Okay, so remember, this is almost 28% of the S&P. This is what really moves the market. Biggest sector to watch. Okay, if you get weakness in this, that's just bad for the market. Okay, bad for the market. All right, now let's look at the second one, XLV. Okay, XLV. Now, it did make a nice little move. Hit its head on a 200 day 3 times. Sold off. Okay, so it broke last week's lows, and look what it did. It actually went to last month's lows and then got some buying right here. Okay, so this is a key level, 128. It's a big level in healthcare in general. Okay, you can see there was a big trend line here, broke it, recovered, now we're back under it. Okay, this is a very key level for healthcare. Okay, now financials, right? Let's look at that. Financials, where are we at? Closed right at last week's lows. Okay, right at last week's lows. So remember, SPY and the triple Qs are below last week's lows. Right now, XLK held last week's lows. Right? Healthcare below last week's lows. And now financials is holding it. Okay? Move on to discretionary. Now, discretionary, okay, was in a big consolidation. Okay, now balance rules Okay, this was a typical balance rules. All right, so we were balancing, got this day up. We broke out. We could not sustain these higher prices. Whenever you do that and come back down, you go back to the bottom of the range here, right? And that tends to then what happens is with Tesla, it just broke back down to the downside. So all these longs had to puke up their position. And we're below, way below the 200-day moving average. So this is very weak. Okay? It's the fourth largest sector in the S&P. It's Tesla just bringing this down. Okay? That's how that was set up. Right? So the four heavyweights, you got XLK is weak but hold last week's lows. You got weak healthcare. You got, but it's at a key level, right? You got financials that held last week's lows. But then you have discretionary, which is very weak. Very, very weak. Okay? Past the 200-day moving average. All right? You're at a key level. Okay? Look at this resistance here in the past. 153. So this could be a bottoming for Tesla's fallen pretty far. You got Amazon and Home Depot. This could be a turn here if we could bottom out here. Okay? But it could extend. Okay? It could extend. Okay? One other thing I can show you guys real quick with these sectors and how I use volume profile. And how you can see what I'm talking about here. Okay? So, this big profile is the month. Each one of these smaller profiles is weeks, right? So anytime a week and a month line up, you're going to get a breakout. Okay, so let's go back to XLK. So you see how 168 was the most traded price of the month. Look at this. This week it's been 138. So look, this is the level to hold. You notice how this is resistance here and support here. Okay, and you got the most shares traded in the month at 168. They have not puked up yet. If this falls, you're looking at falling to at least 165, okay? That's how you look at that. That's how you look at that, all right? Let's look at the second sector, healthcare, okay? Below the most traded price of the month, right? So now, this is a key level, I said, like before. 128, 129 is a key level. Have to see, right? We're below this most traded price of the month of 130, all right? So let's look at financials. Financials below the most traded price of the month of 33. This profile is not telling me as much. Okay. And then discretion. This is the one I wanted to show you where there was the failed breakout. So you see how the most traded price was here for a couple weeks. Broke up. Right here was the, oh, you're going to break out. And then boom. Took out all these longs, right? So now you got some excess here in the profile. Okay, no excess at the top. So you have to see if this gets stretched like a rubber band and rips back. Let's see. You have to really see. Okay. All right. Let's just move on to the market profile because 10-year yields, it just spiked. Everybody knows that. We got a high VIX. So we're just going to move right into market profile. All right, so let's get right into it. So now we have a little bit of X at the top. There's the value area. That's 70% of the trade has happened in the last week. Obviously now we got some excess to the bottom now. All right, we broke here. That was the part we broke. Okay, we're below the most traded price of the week and the month. That's right here. Now the job of the market is, can you bring that down? the most traded price of the week. Can you bring it down here? If you can't, it's going to go back up like a rubber band. Okay, now look, you have a spike right there. Price is right here. We're gapping down right now. Now you have single prints from the past that have not been cleaned yet. So I believe if we hang around here, you can get a straight shot, boom, clean those single prints, and that could be a little bit of a bounce. Okay, so that could be a little bit of a bounce. So spike rules real quick. There's the spike. We closed at the lows. Closed at the lows. Price is here. What is that telling us? The market is accepting lower prices. If you hold within this spike, anywhere in here, that means market's accepting lower prices. So that's bearish. Okay. Now you got a lot of volatility with Powell speaking. There's the high and the low. There's the overnight high. There's the overnight low. Okay. We're gapping down. Okay. This is a very balanced profile. So there's not a lot of edge in this profile. It's very balanced. It's very, very balanced. So I don't see too much edge there. Okay. Now, big marker on a big move down. You got the 50% Fibonacci of yesterday's 43.29. That also happens to be yesterday's most traded price right here. This is, I'd say a line of defense if there's some buying here. Was the most traded price of yesterday, and it's the 50% of yesterday. So that's kind of what got to get defended by bears. Okay. So got supply here. Okay. So in this scenario, like I said, this is the third day down, and you're gapping down. This is usually ripe for a little bit of a bear trap reversal. Okay. So let's talk about that right now. Okay, this is the kind of days I really like to play a reversal. I mean, and it doesn't mean reversal of the markets like we're gonna go break out higher. It just means that there's a lot of selling, and then you gap down. If you're a seller, think of you as a seller. If I'm short from a couple days ago, and now we're gapping down, I'm gonna want to take some profit. Okay, so remember. Let's look at this. You have single prints right here. That could cause the short pop lower. Okay, so what I want to see, and this is a bullish scenario, okay, is the market push down. I want to see a gap and go. We clear these singles out. Okay, and now you either hold these singles or you can drop down to this naked VPOC or this demand. All right, and then if you see a quick move recovery and you see lower highs, right, you're going to at least test the overnight high, and then there is the move. If you get some volume behind this, you're going to go straight to that 50% Fibonacci, the most traded price of yesterday. Okay, that's a lot of selling, and then people are going to take profits, and then there's going to be longs in there for the reversal. Okay, short. Probably this profile gets thin, and then you get a little bounce. Doesn't mean the market's going bullish. Okay, now as far as a short, okay, you have to look at how the market reacts. If we push down here, right, bounce, but we're still kind of weak, come up in to fill the gap into this supply a little bit, start to fail, you could roll. You could roll and go where? Most traded price of the year in the ES. Okay, of course you can do that whole thing here, and you can find resistance at the most traded price, and you can also roll and maybe balance around here. Okay, that's what I see right now as far as the ES. So that was the ES scenarios. Okay, now NASDAQ. Okay. Really quickly, because running out of time here. All right, so we have not excess at the top of this profile, a lot of trading, and then we finally have some excess. Okay, where are we founding support? No surprise here. Most traded price of the month, right here. There's single prints from the past right here that have not been fully cleaned. Okay, so the NASDAQ has a great level here to bounce off of. Okay, for that reversal. Okay, yesterday's highs, yesterday's lows, overnight high, overnight low, balanced profile just like the ES. Closed at the lows. Okay, so this is setting up for the bounce as well. Okay, I would love to see a push down, so let's just get right into what I'm looking at here. I would love to see a push down below the most traded price of the month, recover, higher low, higher low. There you go. Test that overnight high into supply, maybe, and then you can try to go for the midpoint of yesterday, which is 14989, and see if you get even further. Okay, so same scenario for the bear. Right, you could do this move, but the market's weak, and you fill the gap, and you hit the supply, and you just start getting weak. You can go here, possibly go down to this demand zone here. I would think you maybe balance around here as well. That's possible scenarios. Okay, so that is the NQ scenarios. Okay, very similar to the ES. Now, as far as structure that I'm going to talk to you guys about. Okay, so let's look at the structure of the ES. Okay, and where I think we're going to go in the short term. Mentioned the 422 200-day moving average in the SPY, right? But this is the most traded price right here. 420, 42.45 to 42.32 is the most traded price of the rolling year, a year ago, and this year. You see how we bounced here, came up. Most traded price of the month and the week was 4,400. Whenever you have the week and the month equal, you're going to get a big move. Well, there it is. Boom. And where do you think we're going to go? I think we come down here. 42.45, 42.32. I think we come down here, and then the market's going to decide if we break to here, which is 4,100, or we bounce. That's what's going to happen. Mark my words. These are magnets. They're magnets for a reason. Okay? So you got two options, 4,100, or we're going back to 4,400. And I think we're going to tag here. And if we tag here, we could stay here, or do a little bounce, right? That's the structure in the ES. Structure in the NASDAQ. Okay, structure in the NASDAQ. You'll see what I mean right here with these high volume nodes, why they're so important. Okay, let's look at this together. Most traded price of the year, most traded price of the rolling year, 15317. Notice what the market did. The market, these are monthly, that's the monthly low. Right? Then we had a week, a higher low in the week. Now we broke last week's low in futures. Okay. Now, look what we did. We came right up to this price, the most traded price of the year. Look what happened. Right? You had a lot of balance here, and now we're moving away from it. So you can test back to these monthly lows here. That level's around 145. All right. Notice here, that's the low volume node. That's going to be supportive until it's not. So I said this before. There is not much structure below this level. Right. Look at this pocket of volume. This is the node down here, 135. If we break this and hold, we're going here. But we can hold it here. And then we go where? Right back to here and decide what we're going to do. Big level, guys, in this market. All right. That's structure. That's the big view. That's the really big view. So today, can we touch down to this key level down here, 145.78? If we don't, oof. We don't, you got to see. Now, you always got to wait and see, right? It doesn't mean if it goes there, it's breaking. It means it's going to keep going lower. It could fake you out. It could be a bear trap. All right. That's it for me. All right. Hope everybody enjoyed. Subscribe, set an alert if you enjoyed what you saw. Okay, just give me a like as well. All right, and finally, follow me on social media at X on Gaza719. That's the plan. I'm really looking for that reversal. I'm going to be patient. Sometimes it comes quicker than it's not an easy trade. So, all right, everybody have a good weekend. Stay green.